Hello everyone, this is Dare here. In today's video, which we have titled Two Powerful Indicators to Find Breakout, we shall discuss Bollinger Bands and Kettner Channel. These two indicators help us to catch prices before they make explosive breakouts. We will then compare these two indicators. Each of the indicator is sufficient on their own, but when combined will help to determine with greater accuracy if we are in a trending or consolidating market. The combination of these two indicators creates the third indicator, which we refer to as the squeeze indicator. We will also discuss how we can use this knowledge to prepare for breakout. At the end of this presentation, you should be able to determine from a chart when the price is consolidating and preparing for a breakout. The first indicator we will discuss is Bollinger Band. Bollinger Band is a trading indicator and they measure the movement of closing prices around a moving average. The standard deviation of this movement is calculated and lines are plotted a fixed number of standard deviation above and below the moving average. This is a very popular indicator and can be used in both breakout and range strategies. At its core, the Bollinger Band indicators measure volatility of closing prices. The band expands as volatility increases and contrasts as volatility decreases. So typically the bands are drawn to standard deviation around the moving average, which meant that statistically 95% of closing prices are contained within the band. So you see that the upper band is just the 20-day moving average, simple moving average plus 2 standard deviation. The middle band is the standard 20-day moving average. The lower band is the 20 simple moving average minus 2 standard deviation. Okay, we move on to the next indicator, which is the Keltner Channel. Kettner Channel are volatility-based envelopes set above and below an exponential moving average. This indicator is similar to Bollinger Bands, but instead of using standard deviation, the Kettner Channel is using average true range to set channel distance. Because the average true range tends to remain fairly consistent, the Kettner channel does not change much in size. Similar to Bollinger Band, Kettner channels can be used in both breakout and range strategy. Typically, the channel lines are drawn 2 ATR above and below the moving average, and the normal interpretation is that price is overbought or oversold as it approaches these lines. So you have the middle line as in Bollinger, which is 20 period exponential moving average. Remember that Bollinger is made using simple moving average. Kettner channel are constructed using exponential moving average. Remember that upper Bollinger Band is made using 20 simple moving average plus standard 2 standard deviation. Kettner channel is drawn by 220 exponential moving average plus 2 average true range, 2 ATR. Also the lower band of Kettner is 20 period EMA minus 2 ATR, whereas if you are talking of Bollinger, it is 20 SMA minus 2 standard deviation. That's the difference between the two indicators, which we shall see now. So we are going to compare Bollinger and Kettner. There are two main differences between these two indicators. First, Kettner channels are smoother than Bollinger bands because the width of Bollinger band is based on standard deviation, as we have said, which is more volatile than the ATR. Many consider this a plus because it creates a more constant width. This makes Kettner channel well suited for trend following and trend identification. The second difference or differences is that Keltner channel also use an exponential moving average, as we have said before, which is more sensitive than simple moving average used in Bollinger bands. One big advantage that Kettner channel has over Bollinger band is that it reacts more quickly to price changes, and as trends develop, the channel begins sloping up or down with very little lag. You can see that Kettner channel is smooth, whereas the other one is a bit choppy, right? So Bollinger band itself is reacting wider. So when volatility is high, the Bollinger band goes a bit wider, whereas the Kettner channel remain fairly straight, remain consistent. Okay, that's the difference between the two of them, the type of moving average used and also the way they are being calculated. One is calculated by standard deviation, the second is calculated by the ATR. So now we need to combine both of these indicators. So when we combine this indicator, we result into a brand new indicator called the squeeze indicator. So whenever market volatility decreases, we see Bollinger Band tightens and the Keltner channel remains relatively constant. As volatility continues to decrease, the Bollinger Band will eventually move inside the Keltner channel. So we see the volatility here was high and it started to go reduce, and we see Bollinger Band coming together. Initially, Bollinger Band is outside the Kettner channel. This is the Kettner channel inside. This is the Bollinger Band outside. But as volatility reduce and even reduce more, Bollinger Band now find itself inside the Kettner channel. This is what we call the squeeze, the choppy market, the range trading. So the big arrow here indicates where the bands are contained inside the channel. So we try to show here the Bollinger Band are contained inside the channel, inside the Kettner channel, and also here the Bollinger Band are contained inside the Kettner channel. You can note that during this period when Bollinger is inside Kettner channel, prices just move around a narrow range until a breakout, which eventually end the squeeze. So if you are a day trader, for example, and you have this information with you, You know we are in a choppy market. You can sit on the sidelines until the squeeze is over, and then you can continue your trading. So this squeeze indicator here can be applied to any instrument at any time frame. All this indicator is doing is to show when Bollinger Band has gone inside Kettner Channel. That is the extreme low volatility period, and it is very useful because we are preparing for explosive breakout. So if you know this period using this indicator, or if you prefer to use the two indicators together and find out when the Bollinger is in the middle, then you know we are into an extreme low volatility, which of course will end up with an explosive breakout. So you can experiment with these indicator settings. These are the indicator settings. So this indicator, which is the squeeze indicator, has both Bollinger and Kettner channel settings included. One big advantage of the squeeze indicator is that you can use only this indicator on your chart and get rid of this Bollinger Band and Kettner channels. If you want to have a clean chart, you can remove these two indicators, because all they are showing you is already shown on this indicator down here. Okay, now we combine Bollinger and Kettner together for breakout trading. So we want to get ready for breakout. So you can apply this squeeze indicator, the one down here, directly to the charts that you are trading, but it is extremely effective when applied to higher time frame. Take for example, if you are day trading on a 5-minute chart, you can apply the squeeze indicator to an hourly or 4-hour chart and use that as a range indicator. You will see consolidation on the higher time frame, which will help you to avoid very choppy trading on the lower time frame. As you know that trading in a choppy market is not advisable if you use the wrong strategy. So now let us go and practicalize what we have learned so far in a live chart. And before then, this box also show us that Bollinger Band is inside Kettner Channel, and here it's also showing us the same information. Bollinger Band is inside Kettner Channel in this box, and that is reflected in the squeeze indicator. So as an example, a typical breakout trading system will enter a long position following a candle that closes above the upper Bollinger Band and Kettner Channel. That is after consolidation is over. So we know there's a consolidation here, and we know this indicator tells us when the consolidation is over, the color changes or it becomes positive. When we're in consolidation, the indicator gives a negative reading. When consolidation is over, the indicator turns positive. So, and at this point, we know we are no longer in a range. We are out of the range and we are waiting for breakout. So, one of your trade setup could be wait for a close of candle above these two uh, lines, which is the Bollinger and the Kettner lines. Wait for the close above, and then you go long. The similar scenario is if you are going short, you wait for the prices to, after consolidation is over and there's a break downwards, so you wait for the price to close below these two lines, then you will short the market. So you will ride the market up until you hit a support. You can exit your position at a support line or at a resistance depending on the direction of your trade. If you have bought, you'll be targeting a resistance line. If you have sold, you'll be targeting a support line somewhere on your chart. That's one method of exit. Second method of exit is you can use a trailing stop to actually maximize your profit. Okay guys, let's demonstrate this on a real chart. All right, so this is USD Japanese yen 1 hour chart. We see this squeeze indicator here is down here. This one is the Bollinger Band, and this indicator is the Kettner Channel. So let us see each of these indicators properties. So first of all, Bollinger Band, we know it is made of period 20, standard deviation of 2 applied to close price. Kettner Channel is made of same thing, period 20 and ATR of 2 ATR. Okay, and this indicator, squeeze indicator, is a combination of both Bollinger and Kettner Channel. As you can see, the first two settings are for Bollinger, which is period 20, standard deviation 2, and the next two settings are for Kettner Channel, which is period 20 and ATR 2. Okay, so here it is telling us that we are in a squeeze here. We should be getting ready for explosive breakout, and here we go. We have the explosive breakout at the end of consolidation here. We have the breakout here. Then we breakout continues until we got over here and we started another consolidation. The consolidation was over here and the breakout starts over there. So that is how it works. You actually can remove, if you want to make your chart look very clean, you can remove these two indicators and just leave the squeeze indicator all by itself. Okay, let me describe more about the squeeze indicator because it is a trading system on its own. So this squeeze indicator uh, comes with some other parameters. It has an alert, and it has you can display some information on the screen. Information includes MACD and other information that you might be interested in, and most importantly, it has what is called momentum. Okay, so if you look at this dotted line that goes up and down, it's a momentum indicator. All right, so how does it work? So we know when we are in a squeeze, the value of the indicator will be negative. All along here is negative. It turns positive over here. You can also see in the positive values here and negative value when it's in a squeeze. The momentum is also the same. When the momentum is positive, then we are on a upward move. When momentum is under this line negative, we are downward move. So how do you use this indicator? Now you will wait for all the squeeze to complete, and we are ready for explosive breakout, and you will watch what direction is the momentum. If the momentum is above zero, that means we are going to buy, we are going long. If the momentum is negative, we are going short. So let's take few example. All right, let's look at this first example here. We see here that we are in a consolidation all along, and by the time we reach this side, we finish consolidation, and look at what momentum is saying. Is momentum is positive, so that is we buying. Okay, uh if we move a bit forward, the same thing here. We have finished consolidation here. We started consolidation and we finished consolidation, and then we see that uh, explosive breaker has started, and the momentum is also positive, so we are going long. So this is how you use this indicator. If you want to use it as a full trading system, you can play around with the settings of this indicator to help you, to determine what you may term as a range or a choppy period. You can tweak the settings to suit your own trading preference. So, guys, if you like to try this squeeze indicator, please subscribe to the channel and leave your email address at the comment section. I will send the indicator to you. I will also include the Keltner Channel and Bollinger Band indicators in case you don't have them. The template file will also be included. So everybody, in summary today, we have been able to show two indicators with similar characteristics that have been combined together to give us an overall status of the market. So this is all I have for you today. If you like this video, consider subscribing and click the like button. Till next time, have a fantastic trading week, and it's Dare.